Welcome back to Chairman's Briefing. Here we keep you in the know on metals and money. I'm Rachel Lee, and this episode is brought to you by Allied Critical Metals. Jerome Powell delivered his highly anticipated Jackson Hole address on Friday, and mining investors are dissecting every word for clues about September rate cuts. The Fed chair's comments sent immediate ripples through precious metals markets as traders recalibrated their bets on monetary policy. Before the speech, markets were pricing in an over 80% chance of rate cuts resuming next month. But Powell's tone regarding labor market slack and inflation targets will likely determine whether gold and silver maintain their recent momentum or face headwinds ahead. Mining stocks remain particularly sensitive to rate expectations. Lower rates typically boost non-yielding assets like gold, while reducing borrowing costs for capital-intensive mining operations. Small-cap miners especially benefit from easier monetary conditions given their higher refinancing risks. UBS lifted its gold price forecast, targeting $3,700 per ounce by 2026 as central banks continue moving away from dollar reserves. The Swiss bank now sees gold averaging $3,600 in the first quarter of next year, up $100 from previous estimates. The revision reflects what UBS calls robust demand from exchange-traded funds and central banks seeking alternatives to dollar-denominated assets. Central banks are tracking toward another year of a 1,000-ton purchase, despite gold already climbing 28% in 2025. The bank projects global gold demand could increase 3% next year to levels not seen since 2011. However, much depends on whether central bank buying patterns continue at current pace and how macroeconomic risks actually materialize. Equinox Gold delivered shareholders a solid re-rating after dropping results for the second quarter. The miner produced over 200,000 ounces of gold, up 4% from the first quarter of 2025, as its major acquisition of Calibre Mining begins paying dividends. The standout performance came from cost management. All-in sustaining costs hit $19.59 per ounce, while generating $154 million in mine site free cash flow. More importantly, the company sits on over $400 million in unrestricted cash, providing substantial flexibility for its expansion plans. Allied Critical Metals has appointed former U.S. Homeland Security Secretary Kirstjen Nielsen to its American subsidiary board. The move signals serious ambitions for the tungsten near-term developer as it targets defense and critical infrastructure markets. Nielsen will provide a strategic counsel to Allied USA focused on importing and distributing tungsten across key American sectors. Her appointment comes as Allied deepens engagement with U.S. government agencies who are looking to secure domestic supply chains for critical materials. Hudbay Minerals has secured $600 million from Japanese giant Mitsubishi Corporation. It's in exchange for a 30% stake in the fully permitted Copper World project. Now, this deal, aside from reducing Hudbay's upfront funding needs, represents a significant premium to consensus net asset value for the project. Mitsubishi will fork over $420 million upon closing and another $180 million within 18 months. Copper World represents serious scale here. The project holds over 385 million tons of reserves, grading at 0.54% copper, targeting 85,000 tons of annual copper production over a 20-year mine life. That translates to roughly 1,000 construction jobs and 400 permanent positions once operational. The deal also includes an enhanced precious metal stream with Wheaton, worth up to $300 million. Next, we're talking about Marimaca Copper again here on Chairman's Briefing. Marimaca delivered impressive drilling results from its Pampa Medina project in Chile's Atacama region, now extending high-grade mineralization 300 meters westward from previous discoveries. The latest assays confirm this sediment-hosted copper system now spans 1.2 kilometers in both directions. Their standout intercept came from hole SMRD 16, which hit 70 meters, averaging 1% copper. including a 10-meter section grading 4.2% copper. Additional zones returned 116 meters of 0.61% copper with multiple high-grade intervals exceeding 1% copper throughout the whole. These results are validating Marimaca's theory that Pampa Medina represents a unique straight-form copper system with extensive mineralized sequences. Glencore delivered ambitious projections for Argentina's copper future this week, targeting 1 million tons of annual production over the next decade. Speaking at a Council of the Americas event, the CEO of Glencore Argentina, Martin Perez de Soleil, outlined plans that could transform the country into a major copper player. The company submitted applications under Argentina's large investment incentive regime for its El Pachón and Agua Rica projects, targeting combined production of 500,000 metric tons when operational. The CEO suggested that Argentina could supply 2 million tons annually to global markets within 10 years. Now, this represents a dramatic shift for Argentina, which has not produced copper since 2018. The country's push comes as traditional powerhouses Chile and Peru dominate regional production. And there's your briefing for this week. Make sure to click subscribe before you go. It means a lot to us. Thank you for watching. I'm Rachel Lee.